Well, hello everybody and welcome today to NYC Network Group. And I wanted to thank everybody who's watching now and also anybody who streams later on. I just want to make sure everyone knows there will be no Q&A after this session is over. But I am really pleased to announce and excited about Bob Peck from Emigrant today. Bob Peck is an AVP from Emigrant Mortgage, a division of Emigrant Bank. Emigrant has been serving the credit and banking needs of New York community for more than 171 years. Robert's primary focus is the origination and production of small balance commercial loans for multifamily and mixed-use properties. He is also tasked in managing an $800 million commercial loan portfolio. Additionally, Robert originates residential mortgages for 1 to 4 family condos and co-op loans. He has amassed over 21 years of experience originating commercial and residential loans. Now, Bob, if you don't mind, why don't you tell us a little bit about Emigrant?
Okay. Well, first of all, I want to thank you, Susan, for inviting me here, along with Anthony and the New York City Network Group. It's always a pleasure when I meet you.
Thank you.
But Emigrant Bank was formed in 1850 by actually Irish immigrants who came from the country. At that time, it was very difficult for the Irish and actually all immigrants to find banks to let them use their services. So out of no choice, they decided, a group of them got together and decided to open up a bank on their own. And September 30th, 1850, they rented a small building at 51 Chambers Street and started taking the first deposits. They soon realized that not only the Irish, but the other immigrants were having the same difficulty. So they concentrated on the immigrants groups coming over from the country to help them with their banking needs. And as they say, the rest is history. Within a short period of time, they raised $1.3 million and became the 7th largest bank in the country. And
wow. What year was that?
1850.
Wow.
We are the oldest bank. We are the oldest continuing bank in New York City. And we are still the largest private bank in the country. After their success, they started investing very much into New York City and the community. We actually funded the construction for St. Patrick's Cathedral. And we also did a project which became a water project, which became now Central Park.
Wow, it's quite a history.
Yeah. And I didn't realize this, many of you may know it. The name, if you come to the country, you're an immigrant. If you leave a country, you're an emigrant. So hence the name Emigrant Bank, because so many people at that time were leaving. That was during the potato plague in Ireland. So a lot of people are leaving Ireland and coming to America, hence the name Emigrant Bank.
Wow, pretty impressive. Well, I have a couple questions to ask you, because everybody's looking to tap in on your expertise and what you're seeing in this industry right now. So what are you seeing? You know, we've gone through so much with COVID, but what are you seeing post-COVID right now in Manhattan?
It's picking up a lot. I mean, you were here through it. It came a complete shutdown. There was absolutely nobody around for a couple of years, but it's definitely, I see a big uptick, especially in the last couple of months. The office people aren't back yet. I'd say the offices are maybe 30%, maybe a little higher. The tourists are definitely back. The restaurants are back since they lifted the mask mandate, but the offices are coming back. Right now, a lot of them, you definitely tell, and if you're still coming to the city a lot, there's definitely more on the Tuesday, Wednesday, Thursday schedule. A lot are doing this hybrid, you know, taking Monday and Friday work from home. But it's getting there. It's definitely much more activity, especially now that the summer's coming. my opinion, I think eventually we have to get back to the 5-day week. It's going to be hard. I don't know, people running companies or the country,
Yeah.
working 3 days, taking 4 days off, even though they say they work remote, the work's a little, you need the office to feed off each other, to get each other's ideas. So it's common. New York's, a lot of the other states are there. New York's kind of a little lagging behind, but we'll get there.
Yeah, I don't know. I think a hybrid situation, there is an upside to people being able to have the option occasionally to work from home. I think it was pretty seamless for us anyway.
Yeah.
And, maybe having a combination of vacation days, sick days, and remote days might be a good idea, and then satisfy everybody across the board. But I've been in the city a lot lately, and the energy is definitely back.
Oh, absolutely.
It's busy. Restaurants are packed. People are happy. I'm enjoying it. So I hope more and more people do. But
yeah, I agree with you. The energy is the good word. You could actually feel the energy for the first time back again.
I know. Okay, so let me ask you this. What effects has the recent rise in interest rates had on the market? And with that, what types of loans do you see people going after? Your applications, like which product?
The rise in interest rates definitely had a huge impact, especially on the residential. The residential, well, we do residential, but a lot of wholesalers, our bank, when the rates got down to the 3s, everyone was refinancing, which should have been. Now that they moved up, it definitely, back to the 5s, that period's over. Although we had, it's been that way for about 2 years, so it's not as severe as one would think of it, because I think pretty much anyone who was going to do, refinance their house or rate in term probably already did it over the last 2 years. And if they didn't, there was, a reason why they did it. So there was probably going to be a slowdown anyways before the rates rose. Mm-hmm. But it definitely, especially with the residential market, some of these wholesalers were doing over $1 billion a quarter. They went from peak high 100% down. Some are losing literally in the last 3 months 90% of their business. On the commercial side with us, though, the rate in term, we're not seeing anymore. The modifications we're not seeing much of, but we're seeing a lot of purchases come in, believe it or not. And also we do cash out refis. A lot of people cashing out who own, especially on these commercial properties, so they own free and clear. If you pay off your house, pretty much you want to keep it paid off, but on a commercial property, you use it as a business and then for moneymaker. So a lot are cashing out just because there's uncertain times coming up. One, because of inflation, they're looking to buy houses because that's a good hedge against inflation. And second, they're just getting reserves ready, just, expecting the worst. So besides, like I said, rate in term definitely affected the residential, rate in term commercial, but as far as purchases or cash out on the commercial, it actually picked up.
So it seems to me like values are starting to shift a little bit again. It was almost, a couple months ago, everybody bidding wars on everything in the city to purchase. And now things are a little bit more negotiable. Are you finding it hard to lock down like appraisals and loan to values on this situation?
I don't do too much of the residential. My bank does a lot of it. So that doesn't affect us, doesn't affect me that much, or is it? But The appraisal values are definitely affected on commercial because it's all based on the cap rate and the debt service. So that the higher the interest rate, the higher the cap rate goes. And that definitely affects moves into the value of the property. So just rates going up alone gets your expensive costs. So for the debt service to coverage, the interest rate's definitely going to have an effect on it.
Yeah.
As far as residential, a lot of people who were able to qualify for loans are no longer able to, or if they qualified for say 500,000 now with the new interest rate, they only qualify for 450 or 400. So that's also bringing the price of the residential properties down.
I see. Wow. Right now, compared to last year, has your volume been reduced a lot, a little, not at all, or percentage-wise?
Actually, for the commercial, residential, definitely huge decrease. Even though it's starting to pick up. Commercial, not too bad. Like I said, where the rating term slowed down, which there's not too much people really do rated term in commercial because most commercial loans have a prepaid penalty. Mm-hmm. So they were doing it when they were getting near the end of it. But if they were stuck in the middle, with the prepay, it didn't make sense for them to refinance. So it really hasn't. It's upticking now. And like I said, I'm getting a lot of people with cash out or taking money to, start buying other properties because they're seeing a dip in the property values go down, as we just said. And, they're taking reserves in case, it's uncertain times right now. Also, with the stock market going down, a lot of people are investing in investment properties, 1 to 4 family, single family, because like we said, residential is the best hedge against inflation. If inflation continues, the residential market, and the housing markets, property markets are continue to go up. A lot of these people were spoiled. They were used to the stock market. Especially some of these younger people, they never saw a bear market. They're just used to investing their money. Some of these young investment bankers here are making, tons of money they're just used to market going up. They never saw it go down, nor did they realize. As they say, real estate never goes down, which is not true. We found out in 2007, but it is a hedge long-term, These people who became instant millionaires overnight with Bitcoin, also found, now they're not millionaires, depending on which day it is, they're millionaire, not millionaires. So a lot are going into the real estate market and on the investment side. So it actually is, we're having a great year so far.
Good. That's good. Last year was insane. This year, jury's still out for me anyway. But what type of loans are you seeing in the marketplace of most demand?
Well, Smith, in New York City, we're seeing a little slowdown in the multifamily, just basically what happened. And I'm sure you know it definitely with the title company. The rent stabilized laws 2 years ago that really put a cap on people going multifamily. On the DHCR ones, the ones that are rent stabilized, they put a limit before they would, get these in within a certain amount of years, they'd reach that $3,000 limit, or they'd be able to renovate it and make it unstabilized into free market. That is no longer an option. So what I'm seeing is mostly the 1 to 4 families are actually outpricing this multifamily units, the 6 and more, which is remarkable because they're not under the rent stabilized regulations. I'm seeing a lot of mixed use and not alley, but warehouses were very little years ago. Now, since the Amazon and the pandemic, and especially like the breaking Amazon and a lot of these other, delivery companies or shipping companies where they just use them and ship them out, they're getting rid of the average retail brick and mortar, and, just having it shipped. I'm seeing a lot of warehouses, a huge increase in warehouse and industrial.
Over all of the years that Horizon has been in existence, I did very, very few. In the past 2 years, the increase has been dramatic, to say the least.
Yeah, the warehouses, yeah.
Yeah. What makes you guys different?
The difference from Emigrant is, once again, we've been around forever, so people are confident we're still going to be here for a long time. But we're more, we specialize in the smaller commercial. We're not looking for the top, we're not looking for the best rate and do that. We're more like a family-run bank. We're very small in size, even though we got a lot of assets. But we don't have a fit box where if your credit score is 660 or under, you're out of it. We're more open to, because of the size and the way our bank, we could do what we call something that does not fit the box, something out of the ordinary. In my office, I sit where I am now. The president of the bank is 20 feet from me. The co-chairman of the bank is 25 feet from me. The head appraiser is on the office next to it, and the head underwriter is there. So if I have something that doesn't fit the box, or someone wants to do something a little different, I got to go walk 20 feet, one to the other. Hey, we have this scenario. Could we do it? As a JP Morgan, if they want to do something that does not fit the guidelines, you got to go up the pipeline. It takes forever. Me, it takes literally 5 minutes. I could discuss it with them, discuss the pros and cons. And what we say in the Emigrant, we use common sense. If it makes sense, it makes sense that everyone could benefit from it, then we could do it. That's a big advantage of the other banks. Also with Emigrant, once you do become a client and you cost for servicing, which I meet people with these trade shows, or my clients call me, they love the servicing of Emigrant Bank. You call up, you don't get a voicemail where you have to hit 15 times, press 1 for this, but a live person actually picks up. You don't get transferred to India or Ohio. You get a live person. And be honest, we only have our servicing's like about 5 people. So odds are you're going to get the same person. And actually you build a rapport with them. Hi, Dave, you call the same person, like, hi, is David there? Instead of telling you someone else, no problem, they know exactly, what you called for the week before, and you get them, which is uncommon nowadays. I mean, nothing more I hate than you get on, it takes you 15 minutes to get to the real person. You call Spectrum TV or something, and you're just hitting buttons for 20 minutes until you finally get one person to ask you a simple question.
It seems like you have great relationships with your clients, and thinking out of the box is wonderful. Yeah. Expediting things. That's great.
It's true.
So what is your niche?
Our niche is basically, like I said, we do a lot of the mom and pop investors. We love we do the multifamily. We do the 6 and up. There's still a good market in them, but we ask why the DHCR reports and everything. But our niche, basically, we do the mom and pop, investors that own like three or 4 little properties. We love the mixed use that are either owner occupied or investor. A lot of banks don't like owner occupied mixed use, where they own the little deli downstairs or or a little store and they have 2 tenants up. We love it. You know, if times are tough and if you own the building, you own the store and the building, you're going to do everything you can to make that payment. If you just own the, you know, if you're investor, if you have a tenant in there, they can just get up and move, and you know, as you see in COVID, and just move down the street. So we love owner occupied mixed use. We do the, you know, investor mixed use. We are dabbling, you know, like you said, we're seeing a lot of the small warehouses coming in. We also specialize a lot in the smaller co-ops, the, you know, 4 to 10 unit co-ops with the underlying, if they need, you know, get a roof fixed or a boiler went and they need to borrow another couple, 200,000 hours or something, we, you know, will accommodate them on that, where most banks won't go that low.
It's like you've kept the same philosophy as when the bank started.
Yeah, exactly. And we do for National.
Yeah,
Like
really?
back, yeah. We still lend to our foreign nationals too. Well, depending now there's some restrictions, but
That's great. What's your opinion on where you see the market going over the next 3 years?
Well, the market for the marketing thing for New York City, like I said, it's getting better. It's definitely picking up. The energy is there. Like you're right. You like you said, what is the considered the old normal is not the new normal. It probably is going to be a hybrid, you know, work from home, work in the city, but the city's always going to be here. New York really is the center of the universe. The whole world revolves around Wall Street and everything that comes from it. And being in New York City, like you said, there's not a, since I lived here for 20 years, it's not a greater city. It's good. You know, you go away for the weekend to the beach. It's quiet. Once you come, the minute you come back, you just feel the energy. The minute you step foot into it, the construction right now is insane. I mean, every other block there's a lot. They're literally knocking down the old offices and building ground up. 5 blocks around me, I think there's 8 major buildings being built. I mean, it's noisy as heck right now out there. But
residential buildings?
Yeah, there's a majority are moving from the office to residential. Yeah. And kind of like what you said, they'll be working from their apartments, you know, and go walking into work for. And then I am same. I live 5 blocks from my office, so it's great. That's one of the reasons why, you know, I believe in the 5-day work week. But it's good to have both roads. And it is the people are moving to Florida. It's just many people moving to Florida. It's just many, especially the young generation, who are coming in and taking up the spot. It's like you said, the nightlife, the energy, you can't beat it. And the road's turning with the newer people. They don't want to be bogged down. They're not buying, you know, they're not into our generation or my generation, you know, with the picket fence and buying a house in the suburbs. They like the city. They like to be able to get up and move somewhere else in the next couple years. So I think New York's going to be here. It's definitely here to stay, and it's getting better. I mean, you're in New York. What do you think? Where do you see us in 3 years?
Yeah. During the COVID, I never lost faith in New York City. Everybody ran. People were running for their lives, basically. But we can never underestimate it. It always, like you said, there's no other place on earth. The energy in itself, and everybody wants a piece of it. So I think what's happening with the residential market, people are turning their dining rooms into their offices, and that's going to become another new trend with the hybrid situation going on, because being in the office is very important. That's a huge learning curve that happens to you, and you don't even know it when it's happening. But we've made room for the new people who are hungry, and they're going to turn it around. There's going to be new shops opening, new restaurants opening, new dreams being fulfilled. And everybody wants to do that in Manhattan. So I absolutely complete faith in it. And, we've been through this so many times. The market goes up, the market goes down. It's a buyer's market, it's a seller's market. It was a seller's market, now it's a buyer's market. It's the same thing. Historically, it's never really changed.
Yeah, absolutely right. They actually say there's more money be made in a down economy than in up economy. On the way down, when everything's going up and you're buying markets, when everything goes down, is the time to get in. Real estate in the stock market is the only time when something goes on sale, people panic. And, you go to the store, something goes on sale, you buy it. In the housing market, in the stock market, when it goes down, people panic and don't buy, and then they wait till it goes up to buy it. So
I know.
You're right. Now's the perfect time. And it is I agree with you 100%.
Now, all we need is a little bit more product out there so we can get more purchases.
Yeah. and like you said, the deodorants, no. So what stores weren't making it are going to get replaced with different retail markets.
Yeah, I mean, there's
and
a
plus
lot
you
of
got
stuff.
the restaurants in New York. You can't beat the restaurants. I
No,
mean,
you
with the ethnicity in New York, you go to Italian restaurants, real Italian, real Vietnamese, real Filipino. I mean, I got one of the best Chinese restaurants across the street from me, Joe's. I went to place, but I mean, you can't beat the food. And the nightlife and the plays, you can't beat it anywhere in the world besides New York City. There's no place like it.
Well, over COVID, we saw a lot of old timers go, but the things that are coming in are very interesting and good, and these people are grateful, and it's going to be tailored a little bit, but it's going to be the exact same thing.
Yep. What'd you say? With the old and with the new.
That's right. Before we wrap this up, is there anything else you want to mention?
No, I did. Well, I just want to, once again, thank you for. I know you and I know each other for a long time. I appreciate the interview. Again, Emigrant, we're open for business. We've been open the whole time through COVID. We've been lending since 1850. Hopefully, we'll be lending for another 150 years. Hopefully I'll be around for most of them. I don't know how much longer, but, as we're seeing, people are definitely living longer. But, Emigrant, we're committed to investing back in the community like we have been since the beginning. It's a great city. We're not going anywhere. Majority of people aren't going anywhere. Like you said, there's curves. We went through some rough times, especially during COVID, but New York's here to stay, and Emigrant Bank's here to stay too.
Yeah, I agree. I don't know if you're going to be around for another 150 years. I don't even know if I want to be around for another 150 years.
I'll be happy.
But I think Emigrant definitely will be.
Well, good point. Okay.
So I think we're just waiting for Anthony. Hi, Anthony.
Hello. Hi, guys. I know you both. Bob, of course, I used to work with Emigrant and in the past when I was in the mortgage industry. And of course, you guys are great. You guys are great. And please, I encourage my audience to definitely look into Emigrant. I know that Emigrant's going to be sending out a thank you letter with Bob's contact information. And I really do encourage everybody to reach out. And they're a great company to work with. They're just very personal, they'll give you full attention, and they've always had. And so I'm very impressed with them. I know Bob for many years. He goes to all the trade shows, and so he's out there and he's serious. Susan as well. Thank you so much, Susan. And she's also very serious in her business, in the title insurance business. So two unbelievable people here. Guys, this concludes our webinar. I want to thank you guys. Thank you so much.
It's a lot. Nice seeing you, Bob.
Thank you, Susan. Thank you, Anthony.
Thank you, Bob. Robert. Bye-bye.